Welcome back to Investing Talk Podcast. Today we're tackling a question I know many of you might be asking, especially about a company that's, well, seen some pretty interesting twists and turns recently. Is BitOrigin a good time to buy now? We've really dug into a stack of recent analyses and catalyst reports for BitOrigin, trying to understand its current situation and, what might be on the horizon. Our mission here is simple. Arm you with the crucial facts, the different perspectives, so you can make informed decisions for yourself. Now, before we jump into dissecting BitOrigin, if you're finding these discussions valuable, please do remember to hit that subscribe button, give us a like, maybe leave a comment. And hey, if there's a specific company you'd like us to look into next, just drop its name in the comments below. We do look at those.
Okay, so BitOrigin. Let's cut straight to the chase here. Based on our analysis of, well, all the available information we could get our hands on, the overall investment rating for the company, it stands at a low 2 out of 10.
Whoa.
Yeah.
A 2 out of 10.
Yeah.
That's incredibly stark right out of the gate.
It is. And look, this isn't us recommending it for any kind of long-term investment. Not at all. Instead, any interest, any potential play in BitOrigin, it really falls purely into the highly speculative short-term trading category. Very high risk.
Okay, a 2 out of 10. That immediately raises a big question for you, our listener. What factors do you prioritize most when you hear a rating that low right away? For me, it makes me ask, what on earth is driving such a negative assessment? What are the core issues?
Well, the core reasons are pretty clear, unfortunately. There's a significant, and I mean persistent, lack of verifiable fundamental financial data. That's number one. Then you've got the looming threat of Nasdaq listing risks, which we'll get into. And technically,
Yeah.
a decidedly bearish outlook across the board. We're basically looking at a company where the main catalyst for its stock isn't business growth. It's not innovation. It's sheer survival on the exchange.
Survival. That's an unusual and, like you said, precarious position for a public company.
It really is. And let's start with maybe the biggest issue, the transparency problem, or lack thereof. One of those critical things we found is this glaring lack of recent financial transparency. As of September 12th, 2025, BitOrigin hasn't filed a recent 10K. That's their big, detailed annual report for 2025. Their latest disclosures, they're primarily Form 6K filings. Now, those cover ongoing events, press releases, material changes, but not the comprehensive financial results investors need.
Okay, let's unpack this a bit, because these filings, the 10K especially, they're foundational, right? What does it really mean for you, the listener, when a company hasn't filed these key documents? Why should this immediately raise a huge red flag?
It's a massive red flag. Because without these essential filings, things like verifiable revenue, net income, profit margins, earnings per share for 2024 or 2025, they're simply unavailable. Not from any primary reliable source anyway. We also can't verify crucial things like their debt levels, their liquidity, can they pay their short-term bills? Or their cash flows, how much cash is actually coming in and going out. For investors, this just creates immense uncertainty. It makes it nearly impossible to assess the company's true financial health. Forget about trying to project future earnings with any confidence.
So you're investing blind, essentially.
Just so much, yeah.
It's like trying to navigate a dense fog without a map. Or even a compass, really. How can you possibly gauge a company's strength or its future prospects if you don't have its most basic financial statements? Does this financial blackout maybe suggest something else about management's transparency or maybe even their own confidence?
That's a really powerful point. And this absence of key reports, it also prevents any proper assessment of their competitive position. We can't even get direct market share numbers or proper peer comparisons from recent filings because, well, the data just isn't there. The focus seems to have shifted entirely away from showing operational strengths or growth and towards simply maintaining their public company status, almost at any cost, it seems.
Wow.
And that's a crucial insight for listeners. When a company's primary focus becomes just staying listed on an exchange, it's a profound distraction from what should be its core business.
Yeah, that makes sense. And you mentioned the listing risk. This lack of transparency must be tied into that.
Oh, absolutely. It's intimately tied to the other major concern, BitOrigin's Nasdaq listing status. The company, get this, has been trading below the Nasdaq required $1 minimum bid price since February 2025.
Since February? Oh.
Yeah. And as of our analysis, September 12th, 2025, it's sitting around certain 35 cents per share. 35 cents.
Okay, now here's where the plot really thickens.
Right.
Because they've been under $1 for months, which is a big deal in itself, but there was a very recent development on this. Something critical just happened.
Exactly. Just recently, on August 29th, 2025, BitOrigin received a 180-day extension from Nasdaq, basically more time to get back into compliance. The new deadline for them to get their act together is February 16th, 2026.
February 16th, 2026. Okay.
And to comply, the stock needs to trade at or above $1 for at least 10 consecutive business days.
10 straight days above $1. That's not a small task, is it?
Yeah.
Especially given how long they've been down there.
Not at all. And if we connect this to the bigger picture, like you said, this kind of pressure, this fight just to stay listed, it can suggest deep market perceived distress. It points to a potentially weaker competitive position relative to its peers in the blockchain and digital asset space.
Right.
Maintaining that Nasdaq listing is crucial for investor credibility, for liquidity, meaning how easily you, the listener, can buy or sell shares, and importantly, for the company's ability to raise capital in the future.
So the risk of delisting looms large. And for a smaller company like BitOrigin, that could mean a severe hit to investor confidence, maybe even making the shares really hard to sell.
Exactly. It could become very illiquid.
So the company is literally fighting day to day just to stay listed. And that compliance battle is taking center stage over, I don't know, talking about innovation or growing the actual business.
It makes you wonder. I mean, you could argue maybe fighting for Nasdaq compliance is responsible management, protecting shareholders, but is there ever a scenario where this singular focus, while extreme, is okay? Or is it always just a massive flashing red light for you, the listener? What an unusual position for a publicly traded company. It truly is. And the fact they've been consistently below $1 since February, that suggests a sustained, deeply rooted challenge. It's not just a temporary dip. This makes that February 2026 deadline not just critical, but, well, absolutely existential for the company's public trading life.
Existential. Okay, so beyond the murky financials and these very real compliance issues, what do the technical indicators tell us? The charts, the patterns, what are they saying about BitOrigin's stock movements? Any glimmer of hope may be hidden in the charts.
Unfortunately, no. The technical outlook remains decidedly bearish. The share price is consistently trading below both its 50-day and its 200-day moving averages. And worse, those moving averages themselves are trending downward.
Okay, and for listeners maybe less familiar, moving averages smooth out the price, show the trend, right? Below them, and they're falling. That's bad news.
That's exactly right. It's a clear signal of downward pressure. Then you look at the relative strength index, the RSI. It's a momentum gauge, tells you if a stock might be overbought or oversold. Lately, it's been hovering in the 42-48 range. Now, that's not extremely oversold, which would be below 30, but it's certainly not showing any strong buying interest either. It's just kind of hanging out in limbo, reflecting all this uncertainty.
Not in bullish territory at all.
Not even close. Furthermore, the DZD, that's the moving average convergence divergence, another momentum indicator, it remains negative. And its histograms are declining, basically confirming that the bearish pressure is still firmly entrenched. What's fascinating here, but also really dangerous for traders, is the high volatility. Daily swings of 8%, 10%, even up to 16% are not uncommon.
Wow, 8 to 16% daily swings.
Yeah, and that's largely due to the low liquidity we talked about and this ongoing listing risk. It makes it incredibly challenging for anyone trying to find a stable entry or exit point. It's a roller coaster.
So the charts are essentially shouting downward pressure and high volatility in bold letters. For someone learning about investing, this powerfully illustrates how those fundamental challenges we discussed, the financial opaqueness, the delisting threats, how quickly they translate into technical patterns that just confirm that deeply bearish trend.
It's not just a gut feeling. The numbers on the chart are backing up all these concerns.
Indeed. And if you're looking at key short-term levels, support seems to be around that $0.30 mark per share. That's a recent multi-day low. But there's a significant risk of further breakdown if it fails to hold that level. On the upside, resistance looks to be around $0.40 to 43 cents. Rallies have consistently struggled there, capped by selling pressure.
Lower highs, lower lows.
Exactly. That consistent pattern paints a clear picture of sustained downward pressure. It just reinforces the whole negative outlook. Now, you might expect a company in such a precarious spot, battling for its very public existence, to be solely focused on survival mode, just battening down the hatches. But BitOrigin seems to be playing a very different game simultaneously, making some incredibly bold, almost surprising moves in other arenas. What have they actually been up to in the past few months, despite all these major hurdles?
That's right, and that's the intriguing, almost confusing deal narrative of BitOrigin. While all this is going on, they have been active. Back in July 2025, they completed a share capital reduction. They officially registered it in the Cayman Islands after getting shareholder approval. Now, this move decreased the par value per share, that's just a nominal accounting value, not the market price, from $0.30 way down to a tiny fraction, at 0.000001.
Okay, why do that?
Well, the primary aim is usually to increase flexibility for future corporate actions. Think potential capital raises or maybe strategic transactions without running into legal or accounting hurdles tied to a higher, maybe outdated par value. It's a kind of financial re-engineering.
Got it. Financial plumbing, essentially.
Pretty much. But also in July, they announced something much splashier, a significant strategic digital asset acquisition. The purchase of around 40.5 million Dogecoin. Dogecoin.
Right.
As part of a new treasury management initiative. And this wasn't small potatoes. It was supported by newly secured capital facilities totaling up to $500 million.
$500 million in potential funding. And they buy Dogecoin.
Mm-hmm.
That is certainly interesting.
Yeah.
And incredibly bold, maybe even audacious, given their situation. What does that signal? Is it a sign of desperation, maybe, trying to create buzz? Or is it a genuine strategic repositioning, a last-ditch effort to find a new identity amidst these listing woes? What does it say about their confidence in their maybe traditional business model?
It raises all those questions, doesn't it? And the strategy didn't stop there. It kept evolving. In August, they detailed plans to further leverage these $500 million funding facilities. Now, this funding is split. $400 million in Class A shares they can issue and $100 million in convertible debt. And they plan to use this to accelerate purchases of Dogecoin and potentially other digital assets. For clarity, Class A shares usually have voting rights, and convertible debt, well, it can be turned into equity later on.
So doubling down on the crypto strategy.
Exactly. It's an aggressive move, clearly designed to enhance their balance sheet, maybe change their profile in blockchain finance. It really suggests a pivot, maybe towards becoming a more significant player in digital asset management or blockchain infrastructure, perhaps hoping to find totally new growth drivers away from whatever their traditional operations were struggling with.
So while they're grappling with these fundamental transparency issues, fighting for Nasdaq compliance day in and day out, they're simultaneously making these aggressive high-stakes plays in the very volatile digital asset space. That's a truly unique dual narrative for you to consider, our listener. It's almost like two different companies running in parallel. One is focused on basic survival and compliance. The other is betting big on strategic growth in a super speculative market.
Precisely described. And what's crucial to note here is that this aggressive digital asset strategy, it continues to be a central theme, even as their stock price just keeps struggling. Just recently, for example, September 9th, their stock moved below its 50-day moving average again. And technical indicators turned negative back in late August, despite these big strategic announcements about Dogecoin and funding.
Interesting.
It just shows how heavily the market is weighing those compliance and financial transparency issues, maybe more than these bold new ventures right now.
So looking ahead then, what are the key dates or events investors should be watching over the next, say, 3 months or so? What could potentially impact BitOrigin?
Okay, there are a few key things on the calendar. September 30th, 2025, that's when we expect their fiscal Q3 2025 earnings release. Then December 11th, 2025 should be the fiscal Q4 and the annual 2025 earnings release.
Assuming they file them this time.
Well, exactly, assuming they file. These will be absolutely critical. For updates on their digital asset holdings, how they're actually deploying that potential $500 million in capital, and most importantly, any insights into whether their crypto and maybe AI mining strategies are actually translating into verifiable revenue growth. We need to see numbers.
Right. Those earnings reports definitely circle on the calendar for anyone watching the stock.
Yeah.
What else? Anything else we should be keeping an eye on that could, move the needle?
Yeah, a couple of other potential dates. October 11th, 2025 is roughly when Q4 index ETF rebalancing happens. Now, this is where large exchange-traded funds, ETFs, adjust their holdings based on various criteria. While it's certainly not guaranteed possible inclusion in or maybe adjustments by, these ETFs could lead to some external buying pressure. It could potentially help stabilize that bid price above $1.
Ah, okay. So passive buying could help.
Potentially. Then, November 6th, 2025, could bring disclosures of potential institutional buys. This is when larger funds sometimes have to reveal their positions. Seeing a known institution take a stake could provide some much-needed external validation, or at least add some liquidity to the stock.
Interesting possibilities there.
Yeah, but it raises the big question, doesn't it? Will these strategic moves, the Dogecoin, the capital restructuring, combined with maybe some positive news from these upcoming dates, will it be enough? Enough to offset the current deep bearish sentiment and, critically, resolve those Nasdaq compliance issues before the deadline? It truly is a race against the clock for BitOrigin.
It really sounds like it. Now, beyond those scheduled events, what about, say, market rumors or more speculative catalysts that could potentially move the needle for BitOrigin? In these kinds of highly volatile, story-driven situations, sometimes it's the whispers, the unconfirmed stuff that sparks movement, for better or worse.
Absolutely. Speculation is always a huge factor in highly volatile, low-priced stocks like this one. There is some chatter out there suggesting the company might announce a major partnership, maybe something to further integrate AI computing into its crypto mining operations. They have mentioned AI before, so this would build on potential previous collaborations with GPU providers.
An AI angle could definitely generate buzz.
It could. There's also talk, less specific, about them expanding their digital asset holdings beyond just Dogecoin, or maybe even pursuing strategic mergers and acquisitions, M&A, to try and accelerate scale and gain credibility in the broader blockchain or AI infrastructure space.
M&A could be transformative, but also risky.
Very. And given that share capital reduction they did, some are speculating about other possibilities too. Maybe a full rebranding, try to shake off the negative perceptions associated with the current name and situation, or more technically, a share consolidation often called a reverse split. That's where they reduce the number of shares outstanding to artificially boost the price per share, potentially getting them back over $1 quickly to regain Nasdaq compliance.
The reverse split, a common tactic, but often not viewed positively long-term by the market, right?
Often not, no. It addresses the symptom, not necessarily the underlying problem. And finally, there's speculation they might even consider moving to another, perhaps less stringent exchange if Nasdaq compliance looks impossible before that February 16th, 2026 deadline.
Okay, so lots of potential rumors swirl.
Definitely things people are talking about, but it's vital, absolutely vital for listeners to remember these remain unconfirmed rumors and speculation at this stage, nothing concrete.
Right. Treat with extreme caution. Now, let's pivot to the downside because, well, with a 2 out of 10 rating, the risks must be substantial. You mentioned delisting.
Yes. Let's be crystal clear about the risks. The most imminent risk is delisting from Nasdaq if that share price does not get above $1 and stay there for 10 consecutive business days by February 16th, 2026. If they get delisted, it would significantly impact liquidity, making it hard to sell shares and crush investor confidence. It could potentially lead to shareholders finding it very difficult to exit their positions without substantial losses, probably trading on the OTC markets, which is a different ballgame.
That's not just a massive risk, it's potentially catastrophic for current shareholders.
Yeah.
What other key risks should our listener be acutely aware of with BitOrigin, beyond delisting?
Well, there's the ongoing fundamental lack of financial transparency we keep coming back to. No recent audited annual reports, no detailed operating updates. This fundamentally increases uncertainty, and it will almost certainly deter institutional investors. Without clear audited financials, it's basically a non-starter for many larger, more risk-averse funds.
So the smart money likely stays away.
Largely, yes. Furthermore, you've got the low liquidity, the high volatility we discussed, and a small float, meaning relatively few shares are actually available for public trading compared to the total number of shares. All this makes the stock susceptible to rapid, sometimes extreme, price swings, and potentially even manipulation, though that's harder to prove. It can just be a wild, unpredictable ride.
Okay. And what about risks outside the company itself? Sector risks, market risks?
Good point. Beyond company-specific risks, the digital asset sector itself remains exposed to significant regulatory risks. Governments are still figuring out how to handle crypto. Plus, there's broad market volatility inherent in crypto, and these assets are prone to sharp, sentiment-driven sell-offs. Bitcoin sneezes, and coins like Dogecoin can catch a serious cold. And finally, any broader risk-off moves in the U.S. small-cap or micro-cap equities market if investors just decide to sell smaller, riskier stocks that could impact BitOrigin shares acutely, given its already precarious position. It's a high-beta stock in an already high-beta sector, meaning it's likely to move more dramatically than the overall market.
High beta, high risk. Got it. Okay, so bringing all these threads together then, what does this all mean for someone listening right now, maybe considering BitOrigin? We've covered a company with an alarming 2 out of 10 rating, facing a critical delisting deadline, yet, bizarrely, simultaneously making these bold, almost flashy moves in crypto and AI, and with some potential, maybe hopeful catalysts on the horizon. It's a complex picture, to say the least.
It is complex, but the central takeaway, I think, has to be this. BitOrigin presents an extremely high-risk, highly speculative investment opportunity. Maybe opportunity isn't even the right word. It's a gamble. Yes, the company is actively pursuing aggressive digital asset strategies. Yes, they've gained some financial flexibility from their share capital restructuring. But, and this is a huge but, these efforts are fundamentally overshadowed by that critical lack of financial transparency and the looming existential threat of Nasdaq delisting.
The fundamentals are just too weak, too opaque.
Exactly. And there are no strong, confirmed upcoming business catalysts or even sector catalysts that genuinely guarantee a positive shift. Nothing you can hang your hat on. The primary driver seems to be just the necessity of regaining NASDAQ compliance itself. That's not a sustainable investment thesis. So for you, the investor listening, it means weighing the significant potential for loss, and I mean, including a complete loss of your principal if delisting happens and the stock collapses, weighing that against the purely speculative hope. The hope that its new strategies or maybe some unlikely market surge will somehow resolve these deep core structural issues.
So the potential reward seems heavily outweighed by the very tangible risks.
In our assessment, yes. It's a situation where the primary driver for any potential positive outcome appears to be simply survival on the exchange rather than any sign of fundamental business strength or growth.
Wow. BitOrigin's story is certainly a compelling, if cautionary, example. A company navigating these incredibly complex challenges with this strange mix of bold strategic plays on one hand and critical operational hurdles on the other. It really highlights the different layers we need to peel back, the different questions we need to ask when looking at any potential investment, especially in these volatile sectors like crypto and microcaps. So as you reflect on today's discussion, here's maybe a provocative thought for you to mull over. In a situation like BitOrigin's, where you have this stark contrast, which aspect of a company's story weighs most heavily on your investment decisions? Is it the bold, forward-looking strategies, the exciting potential in new markets like crypto and AI? Or is it the boring but crucial stuff, the fundamental, day-to-day financial health, the transparency, the basic compliance obligations? Something to consider for your own process. Thank you so much for joining us on Investing Talk podcast. We really hope this look into BitOrigin has given you plenty to think about, plenty of context.
If you enjoyed this analysis, if you found it useful, please do give us a like, subscribe if you haven't already, and maybe share it with someone who might find it interesting. And remember, if there's a company you'd like us to dissect next, just leave its name in a comment below. We'll see you next time.